Hey everyone, and welcome back. Today we're going to be talking about Robert Kiyosaki's economic predictions.
Oh, yeah, this should be interesting.
Yeah, it should be. So for anyone who doesn't know, Robert Kiyosaki is the author of the personal finance book, Rich Dad, Poor Dad.
One of the most popular financial books ever.
Exactly. And he's been making headlines recently because he's been predicting a huge market crash.
Not just a market crash,
Right.
a massive financial earthquake, he says.
Yeah, and he's saying it'll be even bigger than the crash of 1929.
The biggest crash in world history, he claims.
Wow.
He actually thinks that this is going to be like the culmination of several crashes that we've already seen in the 21st century.
Oh, really?
Like the dot-com bubble in 2000, the subprime mortgage crisis in 2006, and then the 2008 financial crisis.
So he sees all these as kind of leading up to this big one.
Exactly. He thinks it's all connected.
That's pretty scary. So what does he think is causing all of this?
Well, at the core of it, Kiyosaki argues that the main driver is unsustainable levels of debt. He talks a lot about what he calls fake money.
What does he mean by that?
He's referring to the M2 money supply. Basically, it's the total amount of money in circulation.
So like all the physical cash, checking accounts, savings accounts, that kind of stuff.
Exactly.
And he's saying there's just too much of it sloshing around.
Well, his argument is that all this money printing is creating huge asset bubbles, like in the stock market or real estate. But it's not actually helping the real economy.
Because people aren't actually spending that money.
Right. It's not trickling down to Main Street businesses and everyday consumers.
I see. So it's like inflating these markets artificially.
Exactly. And to understand this a little deeper, we need to look at the velocity of money. This is another concept Kiyosaki talks about.
Okay, so velocity of money, what is that?
It's basically how quickly money is changing hands in the economy. So even though we've had all this money printing, the velocity of money has actually been decreasing.
Oh, wow. So people are holding on to their money more.
Right. They're not spending or investing as much, which means the real economy isn't growing at the same rate as the money supply.
So it's like pumping all this money into the system, but it's not actually flowing through and doing what it's supposed to do.
Exactly. It's creating a disconnect between the financial markets and the real economy. Kiyosaki actually calls the stock market the S&P 7 to illustrate this gap.
The S&P 7, why does he call it that?
He's basically highlighting that the stock market, which is often seen as a barometer of the economy, is actually only representing a small sliver of the overall economic activity.
So he's saying that the stock market is kind of in its own bubble, detached from what's happening in the rest of the economy.
Right. And this brings us to one of Kiyosaki's more controversial claims.
Okay, let's hear it.
He points fingers at figures like Janet Yellen and Jerome Powell.
The former and current Federal Reserve chairs.
Yep. He accuses them of being Marxist and implementing a communist agenda.
Wow, that's a pretty serious accusation.
He even quotes Lenin to support his view. He says, the establishment of a central bank is 90% of communizing a nation.
So he sees the Federal Reserve as a tool for this supposed communist takeover.
That's his argument, yeah. Now, obviously, these are very strong claims.
Absolutely. We need to be careful here. It's important to remember that these are Kiyosaki's opinions.
And they're very controversial.
Yeah. Always do your own research and consider different perspectives before forming your own conclusions on such complex issues. But even if you don't agree with Kiyosaki, I think it's important to be aware of his views and understand why he's saying these things.
Absolutely. His views are out there and they're having an impact on the conversation. Whether we agree with them or not, they're part of the current economic debate.
Exactly. It's about thinking critically and engaging with different viewpoints to get a more well-rounded understanding of what's happening in the world.
Right. It's about asking questions and challenging the status quo to get closer to the truth.
So we've talked about the potential for a crash. But is there any good news in all of this?
Well, Kiyosaki does offer a silver lining.
Tell me more.
He believes that crashes, while disruptive, can actually create opportunities for people who are prepared.
So there's a way to benefit from this potential chaos.
That's what he argues. He has this famous quote, the best time to get rich is during a crash.
Interesting.
He believes that assets like gold, silver, Bitcoin, and even stocks will drop significantly.
So buy low, sell high.
Kind of, but it's not as simple as that. He cautions that this will likely be a long crash. It's not a quick in and out kind of situation.
So it requires patience.
Definitely. And strategic thinking. It's about understanding the long-term economic trends and positioning yourself accordingly.
So it's not just about buying the dip and hoping for a quick rebound. It's about having a deeper understanding of the market and playing the long game.
Exactly. And this actually leads us to another area where Kiyosaki challenges conventional wisdom. education and traditional financial advice.
Okay, let's dive into that.
He's incredibly critical of the education system. He argues that it intentionally leaves out financial literacy.
So he's saying that schools aren't teaching us what we really need to know about money.
Right. He believes that schools are designed to create employees, not entrepreneurs, and that they perpetuate a system of financial dependence. People who are reliant on jobs and who don't know how to manage their money or create wealth for themselves.
So we're being set up to fail financially, according to him.
In a way, yes. He believes the system is rigged against the average person, and he's equally skeptical of traditional financial advice like the live below your means mantra.
But isn't living below your means a good thing?
It sounds sensible, right? But Kiyosaki sees it as a recipe for mediocrity.
Oh, really?
He thinks it can stifle ambition and keep people trapped in a cycle of just getting by instead of aiming higher and reaching their full potential.
So he's saying we should be more ambitious, more willing to take risks.
Exactly. He encourages people to awaken their financial genius.
Their financial genius.
It's about understanding how money works, how to use it to build wealth, and not being afraid to break free from conventional thinking.
So it's about taking control of your financial destiny.
Exactly. And a big part of that, according to Kiyosaki, is learning how to use debt as a tool.
Wait, isn't debt a bad thing?
Most people are taught that it is, but Kiyosaki sees it differently. He doesn't view debt as something to be feared, but rather as something to be understood and leveraged.
So it's not about avoiding debt altogether, but about using it strategically.
Exactly. He talks about how he learned to use debt to invest in assets that would appreciate in value and generate income.
So like taking out a loan to buy a rental property.
Right. It's about controlling the debt, not letting the debt control you.
That's a pretty different perspective than what most people are taught.
It is. He's definitely challenging conventional wisdom here. And to illustrate his point, he often contrasts his approach with that of another well-known financial advisor who advocates for cutting up credit cards and living extremely frugally.
So one is all about using debt strategically. The other is about avoiding it at all costs.
Right. And Kiyosaki argues that while the frugal approach might sound safe, it can actually crush people's spirit and prevent them from pursuing opportunities that involve some level of risk.
So he thinks that taking risks is essential for building wealth.
Absolutely. He believes that ambition and a willingness to step outside your comfort zone are crucial for achieving real financial success.
So it's not just about being smart with money, it's about having the right mindset.
Exactly. And this brings us to his investment strategy. Remember how he mentioned investing in cattle?
Yeah, that seemed kind of random.
It's actually part of a broader approach he advocates, investing in what he calls essential needs.
Okay, what does that mean?
Things like food, oil, real estate, things that people will always need no matter what the economy is doing.
So he sees those as stable investments, even in a downturn.
Exactly. He even criticizes the common advice to diversify investments, calling it diversification.
Diversification, what's that?
It's his way of saying that spreading your investments too thin can actually hurt your returns.
So instead of putting your eggs in many baskets, he's advocating for really knowing your chosen basket inside and out.
Precisely. He believes that true wealth comes from focusing your energy and becoming an expert in a specific area rather than trying to be a jack of all trades.
Interesting. So he's all about depth over breadth.
Exactly. It's about developing expertise and really understanding a particular market or asset class.
They use the example of a friend who invests in breeding bulls. Right.
Yes. It's a niche market, but his friend understands it deeply and has been very successful.
So it's about finding your niche and becoming a master of it.
Right. And that goes against the conventional wisdom of diversifying your investments across a wide range of assets. But Kiyosaki believes that true expertise and deep understanding in a specific area can lead to greater returns.
So he's advocating for a more focused, strategic approach to investing as opposed to just blindly diversifying.
Exactly. It's about being intentional with your investments and really knowing what you're getting into. So, a lot to think about there. If you're enjoying this deep dive so far, make sure to like this video and subscribe to our channel for more. Kiyosaki really digs into this by contrasting the more common 401ks and IRAs with these defined benefit pension plans that are more common for government employees.
Okay, so what's the difference there?
Well, with defined benefit plans, you get guaranteed payouts in retirement no matter what happens in the market.
Sounds pretty good.
It does, but Kiyosaki argues that these plans with their guaranteed payouts are actually a big reason why governments are going broke.
Interesting.
And he sees this shift from defined or benefit to defined contribution plans like 401ks as a way for the government to basically pass the buck to individuals.
So instead of the government being responsible for your retirement income, it's all on you now.
Exactly. Here's a plan, you manage it, and good luck. That's how Kiyosaki sees it.
Which could be pretty scary if his predictions about this massive crash are true.
Exactly. And he's especially critical of financial planners.
Why is that?
He argues that many of them don't even really understand money themselves,
Oh, wow.
and that they just perpetuate the system that benefits Wall Street, not the average person.
So he's basically saying they're part of the problem.
In his view, yes. So he's really advocating for people to become their own financial experts.
To take control of their own financial destiny.
Exactly. Not just blindly trusting advisors, but really understanding how money works and making informed investment decisions.
And how do we do that?
Well, Kiyosaki goes as far as to say that financial literacy is intentionally omitted from our education system.
We're not taught how to build wealth in school.
Nope. He believes we're taught to get a job, work hard, save a little, but not how to truly build wealth or create multiple streams of income.
So we're being set up to be dependent on the system.
That's his argument. He even says that the classic live below your means advice, while it sounds sensible, can actually be harmful.
How so?
Because it limits potential and discourages people from taking calculated risks.
So he thinks it keeps people stuck in a cycle of just getting by instead of aiming higher.
Exactly. He's all about ambition and pushing yourself beyond your comfort zone.
And that ties back to his point about debt.
Exactly. He views debt as a tool that can be used strategically to build wealth.
Not something to be feared, but something to be mastered.
Right. He talks about how he learned to use debt to invest in assets that would appreciate in value and generate income.
So it's about controlling the debt, not letting it control you.
Precisely. He provides this great contrast by mentioning another well-known financial advisor who advocates for cutting up credit cards and living super frugally.
Okay, so two very different approaches.
Very different. And Kiyosaki argues that while that frugal advice might seem safe, it can actually crush people's spirit and prevent them from pursuing opportunities.
Opportunities that might involve some risk.
Exactly. He believes that ambition and a willingness to step outside your comfort zone are crucial for achieving real wealth.
So it's not just about being financially savvy, it's also about having the right mindset.
Absolutely. And this leads us to his investment strategy. Remember how he mentioned investing in cattle?
Yeah, I was curious about that.
Well, that's part of a broader approach he advocates, investing in what he calls essential needs.
Things that people will always need no matter what's happening in the economy.
Exactly. Things like food, oil, real estate. He sees these as stable investments even in a downturn.
Makes sense. Even if the market crashes, people still need to eat.
Right. And he even criticizes the common advice to diversify investments, calling it diversification.
Diversification, is that even a real word?
It's a Kiyosakiism. He's basically saying that spreading your investments too thin can actually hurt your returns.
So he thinks it's better to focus on a few key areas that you really understand.
Exactly. He uses the example of a friend who invests in breeding bulls.
Breeding bulls, that's pretty niche.
It is, but his friend understands that market deeply and has been very successful.
So it's about finding your niche and becoming a master of it.
Precisely. And that goes against the traditional wisdom of spreading your investments across a wide range of assets.
But Kiyosaki believes that having that deep expertise can lead to greater returns.
Exactly. So he's advocating for a more focused, strategic approach to investing as opposed to just blindly diversifying.
It's about being intentional with your investments and really knowing what you're getting into.
Exactly. It's about being an active participant in your financial future, not a passive observer.
So much to think about. It's definitely a different way of looking at things.
It is. Kiyosaki is definitely a contrarian thinker.
But I think that's what makes his perspective so valuable. He forces us to question our assumptions and think critically about our financial beliefs.
Absolutely. He's not giving us all the answers, but he's pushing us to ask the right questions.
And to take responsibility for our own financial well-being.
Exactly.
Okay, so we've covered a lot of ground here.
Yeah.
For the listener at home, what are the key takeaways from Kiyosaki's predictions? Like if he's even remotely right about this financial earthquake, what do we need to do?
Well, I think one of Kiyosaki's biggest points is about changing our mindset. He wants us to move away from fear and scarcity and embrace empowerment and abundance.
So not just hunkering down and waiting for the storm to pass?
Exactly. He believes that even though financial crises are disruptive, they can actually create huge opportunities if you're ready for them.
So it's about being prepared, having a plan.
Absolutely. He's not saying it's about perfectly timing the market or getting lucky. It's about building your financial knowledge, having a solid investment strategy, and having having the guts to make moves when everyone else is panicking.
So being proactive, not reactive.
Right. And one of the biggest things he stresses is the importance of continuous learning.
So always be educating yourself about finance and investing.
Exactly. He believes the world is changing faster than ever before, and those who don't adapt are going to get left behind.
Makes sense. So read books, attend seminars, find mentors.
All of that. He's a huge advocate for finding mentors who can help you grow your knowledge and skills.
It's about surrounding yourself with the right people.
Yeah, absolutely. The people you spend time with have a huge impact on your success, both financially and personally. He talks a lot about the importance of building a strong network of like-minded individuals.
People who share your values and goals.
Exactly. And perhaps most importantly, Kiyosaki emphasizes taking action.
Not just sitting around and thinking about it.
Right. He truly believes that knowledge without action is useless.
Got to put that knowledge to work.
Exactly. You have to take calculated risks, learn from your mistakes, and never give up on your goals.
So Kiyosaki's message is pretty powerful. It's a call to action. It's about taking control of your financial future and not being afraid to challenge conventional wisdom.
Yeah, and you might not agree with everything he says,
Right?
but his insights are definitely worth considering. He makes us think differently about money, about risk, and about the role that governments and financial institutions play in our lives.
It's about taking responsibility for your own financial well-being.
Exactly. And at the end of the day, he reminds us that true wealth is about more than just dollars and cents.
It's about living a meaningful life, pursuing your passions.
Exactly. It's about using your resources wisely, both for yourself and for others. It's about making a positive impact on the world.
So if Kiyosaki's predictions are right, the coming years could be pretty challenging,
Yeah, there's potential for some real upheaval.
but they could also be a time of great opportunity for those who are prepared.
Absolutely. The key is to not let fear or hesitation hold you back. Focus on what you can control, learn as much as you can, build a strong network, and be ready to seize the opportunities that come with change.
It's about being adaptable and resilient.
Exactly. Financial freedom is not a destination, it's a journey.
And it's a journey that requires a curious mind, a resilient spirit, and a willingness to challenge the status quo.
Couldn't have said it better myself. Do your research, form your own opinions, and take the steps that are right for you. Don't wait until it's too late. The future is being shaped right now, and the choices you make today will determine your financial destiny.
Powerful stuff. If you enjoyed this deep dive into Kiyosaki's economic predictions, be sure to like this video and subscribe to our channel for more deep dives into complex and fascinating topics.
And don't forget to tell your friends and family about the episode. The more people we can reach with this message of financial empowerment, the better prepared we'll all be for whatever the future holds.
Thanks for joining us on this deep dive. We'll see you next time.